Good morning. Today we will learn about the chapter of accounting principles. The chapter objectives are explain the meaning of accounting principles, differentiate between accounting concepts and conventions, name the accounting standards issued by the Institute of Chartered Accountants of India, and describe the different systems of accounting. Now, what are meaning of accounting principles? Accounting principles refers to the rules and actions adopted by the accountant globally for recording accounting transactions. They are classified into two categories: accounting concepts and accounting conventions. Accounting concepts. Accounting concepts includes the assumptions and conditions on which the science of accounting is based. These are also known as accounting standards. Important accounting concepts are: first is separate entity concept. In this concept, the business and the business owners are two different entities. That is why when capital is contributed by the owner, the capital is shown at the liability side, because for the business it is a liability. Next is going concern concept. We always assume that organization will be going concern. There will be no winding up of the business. That is why there is a profit or loss or assets and liabilities. As earlier explained, only the financial transaction will be recorded in the accounting. Therefore, there is a concept of money measurement concept, cost concept. All the assets in the balance sheet are shown at the historical cost, not at the future cost or the past cost. Next is dual aspect concept, that is for every debit there should be a credit. For every asset there should be a liability. There will be two entries always, either it is in journal entries or in the final accounts. Next is the accounting period concept. There is a concept of period in the accounting system. Either you will prepare it half yearly, annually, or quarterly. Realization concept, when the things are to be realized. For example, the sales has been done at rupees 20,000, but still it has to be come. But sales has been realized, then you can make that entry. Next is accounting conventions. Accounting conventions include the customs and traditions that assist the accountant in preparing accounting statements. Important accounting conventions are convention of conservatism. Invention of conservatism means that we should anticipate all the losses, future losses, but no future gains. For example, in profit and loss account, we have to show the provision for bad debts, provision for taxation, proposed dividend, but no future gains could be shown. Convention of full disclosure. All disclosures should be made by the managers and the owners about the organization. The convention of consistency. The things should be consistent enough. There should be no demarcation every time, otherwise it will not be comparable. Convention of materiality. All the things which are material and which are affecting the accounting system, it should be reported. There is an Institute of Chartered Accountants of India which defines the various accounting standards time to time. It is established an accounting standard board on 22nd April 1977. The function of this board is to formulate accounting standards which are then established by the Council of Institute of Chartered Accountants of India. There is accounting standard. What is the preface to the statements of accounting standard? It defines standards related to the following features: formation of accounting standard board, objectives and function of the accounting standard board, general purpose financial statements, scope of accounting standards, procedure for issuing an accounting standard, compliance with the accounting standard. There is a two system of bookkeeping. Two systems are: single entry, it is used to record only cash and personal account. Double entry system, it is used to record each transaction under two different accounts. It is more reliable and efficient than the single entry system. There is a difference between double entry and single entry system. Dual aspect concept is completely followed for all transactions. Dual aspect concept is not followed in the single entry system. Maintenance of books. Subsidiary books such as cash, sales, purchase books are maintained. Only cash book is maintained in single entry system. In double entry system, they are real, nominal, personal accounts are maintained, whereas in single entry system, only personal accounts are maintained. There is a preparation of trial balance and final financial statements in double entry system. There are no such statements are prepared in the single entry statement. Most important is accounting equation. As defined earlier, there is a dual aspect concept. Assets are equal to equities, that is, assets are equal to liabilities and plus capital. Assets refers to the property owned by the business, for example, plant, machinery, furniture. Equity refers to the right to the properties, that is capital, and liability refers to the equity of creditor like equity share capital, preferential capital, debentures that represent debts of the business. Capital refers to the equity of the owners of the business. System of accounting. There are two systems of accounting: cash system of accounting, mercantile system of accounting. Cash system of accounting is where entries are made only when cash is received, which is followed by the government of various countries. In mercantile system, entries are made for the amount that is due for the payment or receipt. It is followed by the industrial and commercial firms. Mercantile system is generally preferred over cash system because it considers the effect of transactions and reflects the financial position of the company. In this chapter, we have explained the meaning of accounting principles, accounting concepts and conventions, accounting standards, and difference between double entry and single entry system, and different systems of accounting. Thank you.